Welcome, everybody. This is the Thursday evening Viper Trading webinar. If you're here to learn how to trade the futures markets using the Viper tools, you are absolutely in the right place. Today is Thursday, March 28th, 2019. And we got to knock our standard disclaimer out here. Tonight's topic, among others, is proper placement of targets and stops. We're going to go into that in detail, along with trade setups and a number of other things. But first, let's get this disclaimer down here so we can get on with it. All communications from Viper Trading Systems are for educational purposes only. Futures trading does involve risk, and there is a risk of loss. Nothing contained in this webinar or other webinars, including the live trading room, are to be construed as investment or trading advice. And of course, everybody in here does know that you do trade at your own sole discretion. All right. Let's do this. I'm going to do still a lot of new faces here, people visiting for the week. If you're just coming in late, don't worry about it. We are just getting started right now, so you haven't really missed anything, so don't worry about it. And we are recording this. Everybody will get a copy after it renders, either later on tonight or tomorrow morning. Okay, let's get over to screen one. I've got a Russell chart teed up, ready to go over here. And that would be located right about here. So before we dive into targets and stop placement discussion, we need to get on the same page as in regards to what we are looking at here, so you can understand what you're doing first from an trade entry and exit standpoint, and how you're going to trade it before we can really do a deep dive on the whole target and stop issue, because different market conditions warrant different stops and targets and how you handle trail stops. Okay, Kathy, we'll talk about that tonight. I see your comment. Let's circle back. Let me just get this started here, and then I'll circle back for you, and we'll address that issue, because I think some traders are in your same shoes there. All right, I'm just scrolling back a couple of days. This is the Russell. The Russell can be a little spastic sometimes in the fact that it can be in an uptrend and you get these deep retracements. So it's really not for everybody. I'm just going to use it as an example to talk about different types of trade entries. Then we'll flip over to some different instruments and we'll look at crude and ES today. So here's the past few days. I'm here in California. This is Pacific time. We are connected to a data feed. We trade intraday volatility of futures markets here. We use a 4-range chart. We got away from time minute-based charts years and years ago. They artificially distort the price movement with the size of the bars. 4-range is fairly consistent. Russell is an equity. It's the E-mini Russell futures. It's $5 a tick, so each tick of movement over here is worth $5. All the equities are on the June contract. The other ones we like to trade, of course, in the room is crude oil. Used to trade EMD, we don't anymore. ES, we're going to look at that shortly. Of course, gold, E-mini NASDAQ futures. We used to trade YM, we don't. Of course, here's the Russell. So what you're looking at here are indicators that we have produced here at Viper, Gary and I, over the years. Excuse me. And they are the background colors. So that's the green, the red, and the sort of intermediate color here. The bar colors, blue, yellow, and red. Let me blow this up just to give you a sense of what you're looking at here. Power meters. This is the trends on the chart. 4 different types of trends there. Predictors, real-time support and resistance. And then, of course, the most prominent thing on here is the bands. The bands are these lines in the shaded areas. So here's a good way to look at it. If you're looking at this for the first time or you're still trying to understand what we're doing, we use these indicators and the bands to give us a sense of what the trend direction is. So if the trend is up, generally speaking, in this particular morning, you can see an example of a good uptrend. the bars will be predominantly blue, as you can see here in this nice uptrend here. The mid-band and all the bands are stair-stepping up, right? And you get a series of what is called thrusts and retracements. Let me just show a couple of them here so you get a sense of how that works. So you get thrust, turns the background green. The bars start to move up. The bars and the bands start to move up, and then you have a period of consolidation, and you have a short period of retracement. The market pulls back into support. So it is these retracements are where we look to enter trades. So if you're thinking about long buying a market at support, or you're looking to short a market, we have to patiently wait for markets to retrace. So here's an example of what we call, you're going to hear this a lot in the live trading room, what's called a mid-band trade. Mid-band trade is where the market comes off of some kind of swing it has established here, and then it starts to pull back. And then you get a bounce. Here was just a textbook mid-band bounce right off the mid-band there. You can use the object trader tool to enter here using a region box. Many of you have seen that. You know about the tool. A lot of you use it. I'm not going to get into a lot of detail. Gary has several scores of videos that show you how this works. So I'm not going to get into a lot of detail about object trader. But basically, you engulf an area of bars where you want to enter the trade with a region box. And when a bar closes outside, in this case right here, you would be filled long in the market order on that bar right there. So that's the basis of how it works. Now, continuing with this example, there are a number of different ways that you can trade, and this is something you have to sort of practice yourself. And I'm going to put it on here because this does relate to how you handle your... Hold on a second, please. Stand by. I might periodically need to pause, so my apologies there, everybody. Just hang tight. I got a bunch of mucinex here. I'm going to try to fight through this cold in the next few days. Allergies or cough or whatever the heck it is. The most simple approach is to simply trade one contract trading. We don't really recommend that, simply because it's an all-in condition. And what happens here is that if you take one contract trades, meaning that you're only going to trade one lot at a time, lot being a contract, then you have a choice. The choice is this, am I going to scalp my one contract, meaning that, let's suppose that you have a 10-tick target here, and when the market hits 10 ticks, you're out of the trade and you are done. Now, the downside of that, obviously, is the fact that this thing went on to run another, 60 ticks, and you left this whole rest of the run on the table. On the other hand, if markets are range-bound, it may be appropriate to scale back your risk to one contract and have shorter fixed targets, and we'll look at some examples of that in a little bit here. The ideal condition is that you would look to take what we call a minimum of 2 contract trades. Now, some of you have seen me show this many times before. I'm going to go ahead and show it for the new folks. 2 contract trades. Now, I'm just going to explain this once because the approach applies to any instrument that you want to do. In other words, I'm going to show you there will be some subtle adjustments on how you do it depending on the instrument in terms of the scalp part of the trade. But the runner part is all the same. So what happens, let me blow this up so we can really get into do a deep dive on how this works. The market comes back, you're trading the Russell. This is about 8:12 in the morning a couple of days ago. And you engulf this area with Object Trader, and you enable long only, so you're looking for only fills long. Sure enough, you get a close outside of the box right here. Let me take this off for now. Take all this off for now. So you get confused with all this other stuff on here. Okay, all right. Okay, so physically what happens in the market is that object trader fires a market long order on the close of that bar and you're filled. There may be a little slippage. In Russell, there might be. In some of the other instruments, on ES, you will have very little slippage at all, maybe one tick. And now you're long. In the two contract example, what you would want to do, and you have to experiment with what we call scalp. Scalp is the first target you have put in, and you can set OT object trader to do this. It will manage it automatically for you. So hypothetically, let's say you were filled at I don't know, 1380. So 2 ticks would be 14, or no, 10 ticks would be what? 1480, right? So 1480 is right up here. This is considered what's called leg 1 of the trade, or the scalp. So let's come up 10 ticks from here and put a line right here. Object trader would put that target in place. You would have, depending on your settings, a initial protective stop, say 10 ticks below here. Well, let's see where this is. 1380, and this is at 1270, so that's 12. Yeah, you probably on a Russell, you want to go maybe 12 or 15 ticks. You want to get your stop right under, like in this case, the mid-band or a local swing. And then you can set a runner target. Let's say hypothetically you put it up here, 50 ticks up here, so that would be all the way up here somewhere. Runner target. All right, so once you're filled and it pops the 10, this target comes off because it's filled, and then this remaining stop drops to 1 contract because that's all you have left. You now have a runner with a fixed target up here of, say, 40 or 50 ticks, okay? And so what you want to do in order to get to a free trade condition is then get your, and this is the trail stop settings in OT, but you can manually do this if you want. Get your second stop on the second contract to at least 2 or 3 ticks behind your entry right here, and then as the market continues to move in your favor, you adjust the trail stop, and I'll show you that in just a second. Now, when you have a market that's running like you see here, you will want to go ahead and take the runner target out of the way. Just drag it up here out of the way. Because any place you put this, 15, 20, 30, 40 ticks, whatever, it's going to choke off your running trade, which you don't want to do. You don't want to do that. The runners are where a lot of the money is made, okay? I mean, you can do good money scalping, but a big chunk of your profits are going to be in the runners. Now, as the market moves up, can you see that this sneaky snake kind of green looking line here is called the stealth, and this thin green line here, which is called line 6, more or less follow the price up. See how it's kind of follow, hit mark's going up, you go up, pulls back, goes up, pull back, pull back, et cetera, et cetera, et cetera. So what you want to do is you're going to position the trail stop so that it just lags that stealth line in line 6 by a few ticks. Now see, here's what I'm trying to show. If you had it right on stealth or right on line 6 or somewhere in between, like here, then one of these bars quite possibly would have taken your runner out in here and artificially choked off half of the rest of the trade. Everybody following that? So you got long 2 lot here, initial stop down here, scalp 10 ticks, filled, drop the remaining stop to 1. It's an OCO, so it just cancels it. And then now you're trailing. You want to give it wiggle room. You want to let the market move around a little bit. Each market is a little bit different in how you handle that. You have to experiment with that, okay? Here's another example where if you were really super tight on line 6 or stealth, it could have bipped you out right there, right? Now here, this bar on the end of this pullback here probably would have got you on a stop out. Somewhere in here, depending on how you had that last out positioned. So this is an ideal condition trade. You got your scalp off, you didn't feel any heat, you got to the free trade condition very quickly, where you pulled that second stop up to 3 ticks behind your entry. Free trade, what does free trade mean? Does that mean you're not going to pay any commission on that? Is that what that means? What is free? What is when I say free trade? What am I referring to? Anybody? Is that like, you're not going to have to pay anything for it? What does that mean? What is free? You want to ideally on every trade get to the free trade condition. What am I talking about? That mean you're going to save some money that day? You don't have to go to the dollar store? Excuse me. All the trades went on sale that day? No risk. No possibility of a loss. That is correct. Yes. Yes. You can't lose after the scalp. That is correct. So what we're talking about here is that when you bring this thing 2 to 3 ticks behind your entry, right, and you've already got 10 ticks here, so in the event that some weird, funky news things come out and the market flips and just tanks, taking out your stop, you still netted 7 ticks, yes? No matter what happens here, you net 7 ticks. Okay? That's what that is. You on every single trade you take, whether it's long or short, any market you trade, currency futures, whatever, it doesn't matter. Trade them overnight in the European session, it doesn't matter. This is the ideal condition you want to get to with entering a trade in the direction of the trend and then quickly getting yourselves, positioning your targets and stops to get to the free trade condition. So I'm only going to say that once. I'm going to focus more on other entry types and how to manage your trade, but that is the mechanics of essentially how pretty much almost every trade works. Okay? All right, good. Now, let's look at the short condition before we move on very quickly, because how many of you, quick show of hands, have struggled to take short trades? We hear this all the time, and it's perfectly okay. How many of you just like, I don't know, think it's like unpatriotic to take shorts, or you just always, no matter what a market's doing, you think it's going up and you're always trying to get long and you just can't seem to get taking shorts. You just can't for whatever reason. Any show of hands? Anybody? It's okay. You can say, if that's a phobia of yours or, an issue you're working through, it's perfectly okay. Look, we're all traders here. We have issues we're trying to work through. It's perfectly understandable that you could be stuck in a condition where you don't want to take the shorts or you can't see the shorts. Let's fast forward these markets over to today. See, that's a tough thing about this cough. I'm telling you, it's just so unproductive. You just cough and cough and cough and nothing happens and just everything's stuck in your throat. It's horrible. All right, enough whining about my coughs. Let's look at the short condition here. I'm going to do a pop quiz. Brian thinks shorts are easier to take. Shorts can be easier to take. The old thing is it drops. Markets drop faster than what is it? The elevator at the bottom and stair stepping up. That is so true. All right, so I'm gonna do a pop quiz. I hear some snoring over there. People are getting a little sleepy eye. I'm gonna show Russell this morning around 7:20-ish. And then I'm going to advance the chart in real time. I like to do these exercises. They really help people see things. Now, when you think the trend has changed from up to down, you're going to type in a T. Are you ready? Here we go. 7:23 is when I'm going to start the chart, and I will gradually advance it forward until you think that the trend has changed. And I've already told you what it is. It's up to down, so you don't have to worry about that. And you don't have to say any trades or anything yet. Okay, we'll do that in a minute. You don't have to say anything about trades. Just type in a T when you think the trend has changed. Here we go. All right, advancing the chart. $7.26. 727, 730. Blow the bars up a little bit bigger here. They're kind of small. What are we doing here? What the heck is going on? There we go. All right. Okay. 731. 733. Remember, when you think the trend has changed from up to down, you type in a T. That's the purpose of this exercise. 739. 741. Still looking at the Russell. 743 coming up on 8 a.m. Pacific. 750. All right, I'm going to stop it right there. Okay, how many of you got it? How many of you think you got it? All right, let's dissect that. Let's dissect what happened and how, if you see these. Man, I know what it is. It's talking. It makes me cough. When I'm not talking, I'm better. So I'm going to share with you a couple of little tips or tricks or whatever you want to call them to help you see this in the future when you find this condition starting to happen. As you look at this market, is there anything that becomes apparent to you over in this area right here? And before we even got to 723, in this area right here. I used to call this, I had a good name for it. It was called breadcrumb clues. Remember? You heard me say that before? The market leaves breadcrumbs behind. You know, that old, what was that old saying? That old thing for the little kids. You know, you follow the breadcrumbs or whatever. So, you know, when you're trading actively and you're in these markets trying to make money, you got to have your spidey sense up, and you have to notice subtle little things like lower highs and lower lows, because they can be a precursor to a market change. Yes? Here, for instance, you can see that the market was heading up quite nicely. We had pullback long here, long, 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 bouncing very nicely. Holding the midband, we were buying these all the way up. I bought them. Gary bought them. We bought them in the room. We called them out live. This is all the way from the open. This run started all the way down here, right? Pull back in, pull back another shot, pull back, pull back, pull back. There's like 5 of them, right? Now, at what point did this market stop observing and holding the midband after that whole run up for about an hour? Right in here. Isn't that the first break of the midband since all the way back here when the market opened? Right? Is that significant? In and of itself, no. But how about this? And how about this? And how about the background going into a neutral color? That's not a trend change yet. That's right, Brian. So I want to be clear what I'm saying here. I'm not trying to confuse anybody. There are things to observe here as far as the swing levels going down, but that in and of itself does not constitute a trend change, okay? Let's continue on here. Another lower high. Background changes to green. It's okay. As far as we're concerned, this was simply a deep retracement, and the uptrend is still intact. At least for now. Now notice what happens next. Here we get into 725. Now this is significant, and what I'm going to show you is this. Is when a market comes down then and rechecks a swing level like it did right here. See it? It's very important to notice and pay attention if you're trading that instrument to what it does subsequent to the recheck. Right? Can you see the area I'm talking about right in here? See it? So what am I talking about? It's significant, and what difference does it make? Well, you're going to need to see if it does what? If it holds it. Right? It's holding it for now. Well, let's advance it a little bit more. Uh-oh. What's that? What just happened here? Oh, gee, Christmas. Where'd it go? I lost my bars. Hold on. Oh, I hit something wrong on the chart there. Here we go. Okay. All right. There we go. We're back. So we get a thrust. Boom goes the dynamite. No, we're okay. Where am I at here? Yeah. Okay. So back to the subject at hand. In this case here, we can see that it broke down. The background turns to red. Now we have a red stealth and primarily red bars. And what is happening to the mid band and all the bands? What direction are they going? Okay, now quick show of hands. 4 seconds on the clock. Is this move right here down to here considered the trend change? Yes or no? That break of support. Yes or no? What say you, team? Just 3 seconds. You should just instantly know whether it's is that in that break of support in and of itself considered a trend change? Yes or no? Should you typed in a T when you saw that in our exercise? Yes or no? What do you think, team? 2 seconds. Cast your vote. Excuse me. Yes. Because support has been broken. You've put in a third sequential lower low, right? The background has turned to red. All the conditions are present for potential change to a downtrend. So now that we see this, and so a lot of you typed in T's when this happened right here, and you were correct. Now, second part of the same question. Is there a trade entry down here, yes or no? Is this the place you get into it, short, on this break? Yes or no? What say you, team? So everybody said, okay, here's the trend change right here. Well, I better hit market short. It's time to get in. This thing's tanking down 100 ticks. I better get in. I'm going to miss the whole thing. Better get in here. Here, only wants to jump in. Hit that sell button 3 times. Boom, boom, boom. Come on. Let's do it. Take the sim off. Put your real live account on there. Come on. No. What did we say in the first 10 minutes of this webinar? And we've said it in 10 years probably 1,000 times. We are retracement traders. So when you go into a trend, the beginning of a trend and continuation of a trend is the notion of thrust and retracement. This is clearly the thrust part of it. Yes? This is the thrusting part of it. We never, rarely, ever, there might be an exception somewhere along the way, but you just ingrain it into your trading psyche that we do not take thrust moves. Okay? This has to pull back. Now, if it was to pull back, where might it pull back to? This is the looking beyond the right-hand side of the chart, anticipating part of the trade. Okay, the market's sitting here. Here it is, 7:28, 7:29 a.m. Pacific time. Market's sitting right here on the Russell. We're thinking short. It broke. Background red. We're looking for a kiss and rollover from somewhere. Where might it go for us to get in? ¿Dónde está el baño? Where could this puppy go? Up somewhere around the mid-band. Minimum criteria, mid-band or a deep retracement. Good, Jai. So for those of you that are new, let's talk about this. So a mid-band trade is considered anywhere in this area right here. Of course, obviously goes without saying, bands or bars going right on the mid-band, the thick line itself is a mid-band trade. That's obvious. And then the band directly under it or the band directly above it In the case of the short, we're looking for a kiss and roll over on a retracement to get short. Now, it could go higher. We don't know. This is the challenge of trading, right? But we have the bands and the lines give us form and structure to know where to get in to take these. That's the advantage of having these tools, right? It could come as high as here. It could come as low as here. Oops. Getting a little crazy on me there. Calm down there, little Mr. Boxman. It could come into here. This is what's called a minimum criteria, short. It could come into the mid-band area, and it could go deeper. We have to mentally, as we prepare ourselves to enter trades, look beyond the right-hand side and consider the possibilities so that when the market presents itself to us, we will know when and where we're going to get in. So in other words, we're planning ahead. We're not, how would you say, in some sense we do react to the market because the market has to move for us to do something. So in that sense, we are reactionary. But it's more than that in the fact that there is a plan here. We're not just arbitrarily going to say, oh, well, I'll see where it goes. I'll know it when I see it. Now I'm gonna advance this chart again. And then when you think the trade entry comes, now you know it's a short. Okay, so that's already off the table. You know it's a short. You tell me when you would pull the trigger or put a region box in or take some action to take the short. Are you ready? Here we go. All right, where's my cursor? Okay, here we go. All right. Get the bar super big here. You're going to type in the letter S for short, symbolizing that you are prepared and ready to take the short. All right, here we go. Okay, we're at 7:33. You've been watching this for approximately 4 minutes. Remember, you're looking for shorts. 7:33. 7:34. Excuse me. God, this cough's killing me. Brutal. My apologies, everybody. I'm really going to fight to get rid of this thing hard over the weekend. Okay, 7:34. All right, I'm done. Yeah, I'm going to take a bunch of Sudafed and a bunch of medicine today and tomorrow and this weekend. Try to knock that puppy back here. Now, there were several trade setups on here. And let me show them to you as follows. I tried to help you ahead of time by drawing these boxes in areas where you would be looking to get in a trade. Right? I mean, I basically told you with these 3 boxes that if bars came up to any area in or around where these boxes are located, that is your trade setup. So let me ask you this question on the short side here. Are these bars right here located in an area that could be considered to be a trade entry, yes or no? Is this a minimum criteria trade, yes or no? So if you were participating in our exercise, by all rights, when these bars were forming in our reenactment of live bars forming, should you have typed in an S here, yes or no? And did you? Some of you did. Some of you didn't. All right, let's move on. How about these bars right up here? Hold on 1 second, please. I'm going to close this window. It's getting cold out. Give me 1 second, please. So here again, the question on the table is, are these, one, two, three blues and a yellow bar located in our opportunity zone to take a trade from what we illustrated here that we would call a mid-band trade? Yes. Yes, of course they are. In fact, I remember Gary drawing a box around these, and he had a line right here of resistance. Anybody remember that? This was actually trade called in the room, and a lot of people took it. That's a textbook kiss and roll over short just above the midband. I mean, if you went into Wikipedia and looked at pictures of midband trades, this would be right up there. Just textbook. Now, look, a lot of traders have trouble seeing this in real time, right? Is that where you run into trouble? Just asking for some feedback here. Do you run into trouble when these bars are coming at you in real time, seeing the trades, even though you know you should be taking them? I know a couple of you, I'm speaking to a couple of you from earlier when we came in here, made the comment that I can't seem to take the trades. Is that where you're running into problems? So we're in a static environment here, and we're looking at the trade setup, but somehow when the real-time bars come in, it's confusing to you, and you can't pull the trigger. You just don't see it. Or you don't see it until after it's already happened, and then it's gone. Because some of you typed in S's to enter short down here, and I wanted to circle back and say that was not correct. If you typed in an S down here, that was wrong. The trade was up here. By the time you're getting in down here, people are getting out of scalp trades already. Okay? Sometimes it can be fast. So I'm going to speak to that comment. Jai said sometimes the markets are moving too fast. Well, if you have a fast market condition and you're not comfortable trading it, should you trade it? If you came to me and you came to the team and you said, well, you know what? I've traded the Russell and I see these trades. I know where I should be getting in, but the darn thing just comes up here like in 30 seconds and flips and I don't have a chance to get in. Yeah, find another instrument. Go to ES. Try crude oil. Try gold. Try something else. That's why we took NASDAQ out. Some people still trade NASDAQ. They can deal with the speed. They can deal with those algos. YM got that way for a while too, yes? Okay, let's move on. Knowing what you know now, let's do another exercise. I'm going to do this exercise again, and I'm going to advance the chart beyond here. And when you think there's another trade short, you type in an S. Tell me when you're ready. You've gained some knowledge, right? You've gained some knowledge, and from what we've shown you, everybody in here sees and knows. You ready? Okay, come on, here we go. Let's do another one together. Remember, typing in an S when you think it's time to get short. Here we go. 739, 740, 741, 742. This is actually pretty fast because I'm showing these bars that technically would take a minute to form, and I just showed it in like 5 seconds. So this is probably on like 500 times how it really would go. 743, 744, 740, yeah, there we go, 744. Remember, when you think you see a short trade setup, you type in the letter S. Continuing on. All right, time's up. So are these bars right here and right here located in an area that we have identified for you to take a short entry on a retracement? Yes or no? Are these bars and these rectangles in an area where we have already identified the trade entry to occur? Just a simple yes or no question. Are they in there or aren't they? Should everyone in here tonight and everybody watching on the recording have typed in the letter S when these bars formed right here? Every single person in here should have typed in an S when these bars formed right here. So explain to me, maybe some of you, and this might be helpful for everybody here as a team, so let's just ask the question. For those of you that did not type in an S, is there a reason you didn't? I mean, are you not seeing it? Are you not understanding what we're saying as far as trade entry is concerned? Or, quite possibly some of you are busy doing other. You might be eating some dinner, playing with your dog or whatever. That's okay. I got a lot of people in here tonight, and only a handful of S's came in. So it's okay. I mean, if you don't want to participate in the webinar, I try to make these as interactive as possible because I've learned over the years it helps learning to interact. As opposed to somebody just sort of barking information at you. It's always hard to learn and have it stick in your cranium. Kathy said, this is the feedback I was looking for. This is and I'm asking for feedback. I'm trying to find a way to position this information so it goes in and sticks so that when you see this tomorrow on an instrument that you trade, you know what to do, right? Kathy offering this feedback, she says, seeing the green stealth would prevent me from taking that trade or make me hesitate to take it. Huh. Interesting. Oh, gee. Hold on. Sorry about that. Sometimes when that coffee gets going, you just can't stop it. It's just out of control. So let me address that, and this is good. I'm dying here. I don't know how much more I got in me. I'll try to make another 5 or 10 minutes. When a market is downtrending, excuse me. Yeah, sorry. When a market is downtrending, let me ask it like this. Do we care about the green stealth? When a market is in a downtrend, is the green stealth relevant to our trading decisions, yes or no? That green sneaky snake line. What say you, team? Does it have any relevance at all? No, none. Zero. It has nothing to do with the trade whatsoever. Now, I'm not saying to take it off the chart. That's not what I'm saying. I didn't say just chuck it out the window and delete it. That's not what I'm saying. I'm saying that if the green stealth in a downtrend is causing you to hesitate to take the trade, you might want to think about taking it off because it has absolutely no relevance to the decision. It has everything to do with the price action and where the price is located relative to the bands in the mid-band. That's all that matters when looking at trade entry. None of this stuff else matters. None of any of it. Well, I mean, there are swing levels, okay, and there's lines and there's support and resistance, and there are other factors, okay? That's not completely true. But I can tell you for a fact, the stealth line has nothing to do with it. The only reason you would want to leave the stealth line on is for trail stop purposes. And I explained earlier how we use that, right? Now, likewise, if we go over here to the uptrending condition, right here, let's see if I can find an example of that. And let me ask you this question. It's perfectly okay. This is actually good to know because I didn't even think of that. Would this red stealth here cause you to hesitate or not take this mid-band long trade right here? Anybody? Here's another one. Here's kind of a little snubby snippet of one right here. Red stealths showing up in an uptrend. On pullbacks, on retracements, red stealths showing up. Would they cause you to hesitate? Would they cause you to question the trade entry? To not take it maybe? These little red stealthies in an uptrend? They shouldn't. It does confuse me. Really? Okay. All right. Well, like I said, I don't normally say that, but if it is hurting you taking perfectly good trade setups because the color of the stealth line is throwing you off, you might want to take stealth off. Okay. Most of you, almost there, I'd say full 98% of you has said it has no factor in your decision making, and that's the way it should be. But what I'm hearing from some of you is that you can't just ignore it for some reason. You can't just turn a blind eye to the fact that there's a red stealth here. And furthermore, over here in the downtrend on this retracement, you had a little green stealth show up here, and you had a longer one here. You can't wait until that changes. See, if you're waiting for that to change, you're not getting in till way down here. You can't do that. I mean, you can, but it's going to hurt you. You're getting in way too late. You needed to enter this trade up here. Okay? So, maybe the thing to do for those of you that this is causing an issue for is to experiment either way. All right? If you're missing good trades because you see a counter color stealth line, then look at trying to take it off and see if that clears it up for you. That you're able to see the trade entries and not allow that to dissuade you from entering the trade. Okay? Yeah, so try that. Try just taking the stealth off. And if that fixes your problem, then leave your chart like that. No, Kathy, that is not correct. Let me just tell everybody what she's saying. And this might be causing you a lot of angst because you were the one that typed in earlier that you can't seem to see where to get in, or you hesitate, or you just can't seem to take the right trades. She's typed in this. To me, a green stealth line means it's a green light and I should be going long. No, that's not what that is. That is absolutely not what that is. I would really, for Kathy and anyone experiencing this issue, you really want to go in and maybe take that stealth off for a while and try to see if you can see the trade entries better and get better entries. That's absolutely not what that means. A green stealth does not mean go long. We're obviously in a very strong, protracted downtrend move here. This is just huge, massive sell-off here on the Russell. Textbook midband, textbook deep retracement. Trail. These trades made a ton of money. A ton of money. Here's another one right here. I don't see how anybody in all due respect, I'm not disrespecting anybody here, but would look to get long anywhere on this chart other than over here when it was in an uptrend. Is there any point in here where you would take a long? Here's a little green sneaky snake right here, a little snippet of a sneaky snake poking his head out right there. That obviously doesn't mean long. No, this is all shorting opportunities. Short. A strong, powerful downtrend. Here's another one right here. Is everybody seeing these? I don't know. I don't know. I don't understand. Maybe it's confusing for some of you. Is it really confusing? If it is, we'll try to. If it is, it's okay. Look, we try to teach this the best that we can, and if we're not showing things right, or you're not able to see it, maybe you need to change a little bit what we're doing here, and I don't have a problem with that. Jai says it's crystal clear. She got no problem with it. All right, tell you what. Before we wrap, let's continue this exercise, and I'm going to do this. I'm going to recreate real time for the rest of the morning, or for another hour on Russell. And here again, what we're going to do is I'm going to advance the chart like we're watching it in real time, and I'm just going to help you out. It's only going to be shorts. That's all we're looking for here. And when you see an opportunity that you think you would take a short, type in an S. Ready? Okay, let's advance it beyond 756. Here we go. Typing in an S when you believe that the short trade entry has presented itself. Here we go. Excuse me. Okay, there's 8 o'clock. 801. We're not counting this, obviously. These were all on the chart prior to our exercise. Our exercise began here, so we're looking forward to the right. When you think that there's a short trade that you would enter short and pull the trigger, you type in an S. Here we go. 802, 803, 804, 805, 806, 808. Let's blow these bars up really super big so you can see them in good detail. So by this point, I think we closed the room right around 8 o'clock. So the room was actually closed. Okay? But I know some traders, continue to watch and trade the market. So that's why I'm doing this exercise. All right, moving on. 808. 809. There's 810. 811. 811 right there. 812. 815. 817. Right there. 817. There's some heck of sell programs kicked in on that pup, didn't she? Sell program algorithm running on shorty short. Right? 820. There's 821. 822. 826. See some S's coming in. There's 831, 832, right there. Yep, 831, 832. 834. All right, I'm going to stop it right there. All right, how many of them did you get? Counting shorts. How many short setups are on this chart between here and here? Okay, now that you see the whole thing all together, no, we're not doing it in real time. We did that just a minute ago, right? Over to here. How many short trades are on this trade? How many short trade setups are on this chart? How many? I'm going to count them in a minute. Just type in a number. How many do you think you saw? And then we're going to count. All right, see some numbers coming in here. We got some fives, a lot of fives, some fours, a two, a lot of fours. Sixes from David and Dennis. Ty says 3. Maurizio Ciabella, my friend. His call is 5 short trades. Kathy coming in at 5. Richard, okay, those look good. Chandra, Bruce, good to see it. All right, so we're counting shorts. Is the first short located here? I'm going to give you a choice. Or here? Short opportunity number 1. Is it A or B? Okay, remember our rules. A, short trade, we're looking, so we're counting shorts to the right of this line. Yes? Okay. And is this a short, A, or is this the first short, B? No, it's one of them. It's one of them, David. It's not neither. I'm not messing around with you. One of these is a short. Either it's A or B. Which box? Let's say you, team. All right, I've got a whole slew of B's. Yes, B. This was short trade number 1. Many of you got this. Okay, it's a minimum criteria retracement trade, which are identified on the short side as closing above stealth, which it did. Excuse me, and closing above line 2 in the short condition. This did not close above line 2, although it did close above stealth. So this is a no. That A box was a no. Okay, where's the next short? Many of you got this. Mid-band trade right here at 811. Good. That is short entry number 2. Put a 2 on top of it. So now we got 2 shorting opportunity entry setups on the Russell after 8 o'clock. All right, good. Most of you got that one. Cool. Okay, now another choice. For the third trade setup, short, is it located here? I'm going to call this box C or box D. Looking for a third short entry in the downtrend. The trend is down, so we're shorting rollovers. This is box C, and this is box D. And it's not neither. One of these is correct. So it's either C or D. We'll give you another 2 seconds. Just type in your letter. All right, time's up. It's D. Just like these other 2 boxes over here, obviously you can see that this bar did wick the stealth line, the sneaky snake red one, but we did not close above line 2, so it did not meet the criteria for minimum trade entry. However, this one did. So that was entry number 3, short, right there. Okay? A lot of you got that one. Good. That's good. Good for you. All right, cool. And then how about right in this area right here? Does that meet the criteria? We're in the band just under the mid band, yes? Okay, there's trade number 4, short. On Roosty Bird. Good. This turned out to be a real chicken dinner. Look at the drop on that thing. Stopped out. Now, could you make the case that this was the 5th trade entry right here? Yes or no? Should we put the number 5 on the top of that box? Yes or no? Based on the criteria we've identified for getting into short trades. Does that meet any of the criteria? Now, did it work out? That's a whole separate question. That's not the question at hand. Is it a legitimate entry? Yes or no? And I'm not asking did it make any money. That's not the question, right? Yes. This is bars sitting on the midband itself and qualifies as a midband trade. And so the answer was 5. You typed in 5 short trade entries on between these 2 lines. You are correct. Now, obviously, you can see here. Let me blow this up. You got filled and close of that bar. It started to move quickly against you, and your initial stop was probably sitting up here somewhere. I don't know. Excuse me. I don't know, maybe up here, depending on where you actually put it. So what can you do when you get into a trade? In this case, this box right here, or you had a sell order at the midband or a limit order, or however you got in, and immediately starts moving against you, coming back up towards you and going back in the box and what have you. You got to wait until it comes all the way back up and get a full stop out. Do you need to do that? Is there something else you could do in a condition like this? And we show this in the room all the time. Things don't go our way. What's that saying you hear out of Gary like 400 times a morning? Don't let it go against you. You ever hear that in there? You ever hear that in the room? Like 20 times a morning? Well, no, maybe not that many. I'm exaggerating. So what are we talking about? Yeah, you hit the close button. Good. Kathy, yeah. You get out. Right, Michael P. Hit the close button. Pop open your whatever you got over there and just hit close. Close. Go in, mouse over your your main window there. Right click, close position, flatten everything, whatever. Just get out. Dump it. You don't need to get a full stop out. That's what I'm trying to tell you. Because you're going to know, on most of these trades, like all these trades up here, these 4 other trades that worked out perfectly and made a ton of money, that, they immediately move in your favor. Every one of them. See that? This one was huge. Number 4 was just monster. See how they just, you go up, it kiss and rolls, you box it in, you know how by hook or by crook you're short. And then this one didn't. All right. So this is telling you something. There might be a trend change afoot. You're not getting the follow through back down to the bottom. For whatever reason, the sell programs are taking profit to turn the sell programs off. It could be any number of things, right? You just want to hit the close button and dump it. Get out. Minimize the losses. That's what you want to do. You want to minimize the losses. All right, that's a wrap. Any final questions? Final questions before we shut her down.